Okay, so earlier we were talking about who a broker is, and then who a broker, the B broker, all that stuff, all the good stuff in the forex market. So now we are going to continue with what we were doing earlier, and then we're talking about the trading platform. And then we said the trading platform is just like you having internet browser. It just gives you access to the liquidity provider, or that is where you access your liquidity provider or trade forex, and then your broker acts like an internet service provider when we're comparing it to what you trying to access the internet. So your broker is like the MTN and then the Vodafone. So they give you access to the liquidity, or let's say the forex market, to make it simpler. So let's look at the parts or the few parts of the MT5 that we are having over here. So this is an MT5. Now, to my right, okay, or to my right, I don't know how you guys will be saying this, but sometimes this thing has been messing up. Okay, now let's watch this. Over here, we are having the quotes or the symbol, depending on whether you are using the phone or you are using the laptop to trade or the PC to trade. You'll be having what we call the quotes or the symbols. Now, the symbols is where you can find your currency pair, and then you can find your bid price and then your ask price. Now, one thing that you should know is that basically, if you are looking out for the bid or the ask price, now simply the bid price is the price that if you are to press a sell right now, the market, we are going to sell at. That is the price. So let's say we are watching the chart or the currency pair of the BTC USD. So we are pairing Bitcoin against USD. You see, so let me admit a few people. So when you're watching a chart like BTC USD, now this is what you have here on the symbol, the part that I've labeled symbol. The part that I've labeled this side, this whole side. Well, I'm just drawing my circle at right now. So this side is what we call the symbols, where we have our symbols or our currency pairs. So how do we know that the currencies are paired together? So most of the time, this is what you're going to find. You're going to find the abbreviations for the currency. So let's say we are having GBP, which represents the Great British Pound. Okay. GBP. And then we are having the USD. So with this is how a currency pair is written as. So for example, this is one, the GBP USD. This is how it is. And then you are going to see the price. Now necessarily what this means is that, you see? Oh, okay. Let me admit a few more. So basically what this means is that for you to get £1 or £1 British pound, you will need, let's say the price of this currency pair is what 1.221. Now, all that we are saying is that for you to get £1 British pound, £1, you will need 1.22 USD for you to get £1 British pound. That is why the currencies are paired together, so that you can trade the differences in price. You know, in forex, just like I said earlier, it's a CFD, which I said it's a contract for difference, or some people even say currency for difference. So we are trading the differences in price of within the currencies. You get it? So we are having numerous currency pairs, which you can even go ahead and look at. So this is the first part. The second part, again, you're having a navigator where you'll be seeing your broker and then the services if you want to use an expert advisor or anything. And this is one of the best. Why I recommend MT5 is that you can also code your own scripts or your own programs into the the Meta Trader app. That is one of the beautiful things that you can ever have with the with the MT5. And then to my right again, initially, right now, this side, it is the price of the assets that you are watching right now. So currently, you can see that there is a line over here, which is moving. I don't know if you can see it. There is a line which is moving around, and then you can see that the numbers are changing. Right now it's at 18,315, and then it's just changing. So it's just telling you the price of what BTC. So what we are looking at right now is what is BTC USD. Now for us to see BTC USD, which is this over here, all that it's saying is that what for you to get one BTC USD, for you to get one BTC, you need what? $18,295. As easy as that. That is all that we are saying. So if you go ahead and check, a friend cannot join. The password is forex. If you know anyone who wants to join, the password is forex. The password always remains the same. So just like I was saying, if we are to look out for the price of BTC USD right now, this is the price of BTC USD right now on Google. So look at it after I refreshed. This is there. So you can see. So this is basically it with the currency pairs. If you have any other question, please ask, and then I'll be willing to address. So let us continue. I think I need to. So next thing is that we are having the chart area. Now the whole of this side, where I'm using my pencil right now, my pen, is what we call the chart area. The whole of this side, where you can have the candlesticks, you can have the lines, you can have every other thing. Now, sometimes you can watch the forex market like this. And then over here, you can either have this is a candlestick chart. Now I'm going to explain why we are calling this a candlestick chart right now. You see it as it is moving right now, it is called a candlestick chart. Now we can also have another type of chart where we have the line chart. This is an example of the line chart. So it's just giving you information. You see, the chart area is giving you information about price. This is price. The price is to your right. The price of an asset. It's not anything difficult. It's very easy. Okay. This is the price of an asset. So 18,000 what? 370. That is the price, the current price of BTC against the US dollar. So you understand what you are doing is very, very simple, relatively very simple. You just have to understand the concept. So any pair at all that you pick, you can also pick a pair like XAU, which represents gold against the US dollar. So when you pick right now, the current price of gold is around 1840. That's $1,840. So if you're having $1,840, you can purchase what? One gold. You get it? One gold bullion, I presume. So this is basically how this thing works. Now this is the line chart, and then we are also having the bar chart. We can also have the bar chart. This is what the bar chart also looks like. It also gives you information about price. But predominantly, if you are learning my strategy, we are going to be using the candlestick chart, which is this. Now, there are some parts of the candlestick chart that I will teach you, and I will use an image to do that. Hope you guys can see the screen. Type the password for the group inside there. The main group. Again. Type the password for the Zoom link. Yeah. Okay, so this is the parts of a candlestick. Now, just like I said earlier, we are having two parties, right? Since we are having two parties, each and every we are going to be having two different types of what candlesticks, and then we are going to have the bearish and then the bullish. You get it? So for this type of trading, most of the time we see that the bears are represented with red, with a red candle or with red, and then the green is mostly representing buyers. So this is representing bears. And then we said earlier that bears represent what? Sellers. So what is the aim of sellers? And then the bulls represent what? Buyers. Oh, sorry about my handwriting. The bulls represent what? Buyers. So I said earlier, if you join the morning session or if you look at the recording, all that I'm saying is that bears just represent sellers, and then sellers what are trying to push the market price down. That's the aim of sellers. And then bulls are what? Pushing market price up. So now, for example, this is what differentiates a bull candle from a bear candle. So with a bull candle, this is what happens to it. Now it opens below, or it starts from the bottom and then moves all the way up and then closes at the top. With a bear candle, it starts from the top and then closes all the way down. Now we are having the parts of the candlestick, which is the body, this side, the rectangle parts, the vertical rectangle that we are seeing over here. That's what we call the body. And then we are having this side, which we call what? The shadow or the wick. Most people call it the wick. And then we are having, so this candle consists of what? A body and then a wick or a shadow. Now, the only difference is that with a bear candle, it's mostly what? It's mostly represented with red, but it's constant. One thing that is constant is that for a bear candle, it opens at the top and then closes at the bottom. And then with a bull candle, it opens at the bottom over here. Where is my cursor? It opens at the bottom and then closes at the top. You get it? Just like this. So we can also have a candlestick, which is just having only wicks or a very little or nobody at all. It looks like a plus. So this kind of candlestick is called what? A doji. It's just having, let's say, no wick, or it's having a wick or nobody or just a little body. Something like a very small, which looks like some kind of a plus. Like this, like the one I'm trying to draw right now. This is what we call a doji candle, D-O-J-I. It just represents indecision in the market. So we don't know whether the market is going up or is going down. Just like we said that when the market isn't going up, it's not uptrending or isn't picking a direction, we see that that market is ranging. And then when a market picks a direction, either up or down, we call it what? A trending market. So if it's moving up, we call it an uptrend, because the direction is moving upwards. And then with an uptrend, it's predominant and then represented by or dominated by what? Bulls. Since the path of least resistance is to the upside, and then to the bears, we are having what? Or in a downtrend, we are having bears. Hope you are not getting confused. If you are getting confused, just keep it and the video will be sent out. You watch it over and over and over and over again. You get it. Okay, that's not anything difficult at all. It's not anything difficult. Relatively simple. Relatively simple for you to make a lot of money. Okay, so let's continue. This is what the bull and then the bear. Any question before I move on to the chart again? Any questions?
No, please.
Hello. Hello? Any question? Okay, so since there isn't any question, let's continue. Okay, I can see something in the chat box. Nope, 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 nope. Okay, so let's continue. And it means most of you understand what I was saying. Okay, so let's continue. Now we are looking at what we are having time frames on the market or the candlesticks. So we are having the 1 minute time frame, we are having the 5 minutes time frame, we are having the 15 minutes time frame, which is mostly represented by M1 for the 1 minute, M5 for the 5 minutes, which we can see here. M15 for the 15 minutes, H1 for the 1 hour, H4 for the 4 hour, D1 for the 1 day, and then we are having what W1 for the 1 week, and then MN for the monthly time frame. So right now we are watching BTC USD, and then this is the 1 minute chart so that we can see how candles are formed right now. So now we can see that this is a bearish candle. Why do we know that this is a bearish candle? Because it opens at the top. This is where it started at the top and then comes down all the way down. Now, the moment the candle starts to move away from the downside and then starts going up, that is when it creates a wick. If it comes back, it consumes the wick. I hope we are all seeing this thing right now happening over here. So this is just telling us that what is a wick? A wick is an initial point where price got to, and then what was consumed by the opposing party. So let's say that it was a sell, that is all, it was a bearish candle, and then it's going down, right? So since it was consumed by the opposing party, which is what was the opposing party? That's the bulls, and then it moves it up. So you see this candle just closed bullish. So it means that it started over here and then closed at the top. That is why it is a bullish candle. But it initially started as a as a bearish candle. Why did I say that it initially started? And then since it got consumed, that is what created the wick. I hope you guys are understanding this. We are looking at the market raw and then instantly so that we can see how wicks are formed and then how candlesticks are formed. So you can spend some time and then backtest and then be watching the chart. Now, since the forex market closes on Fridays, that's Friday evenings, that is why we are watching the chart of BTC USD as a CFD, as a currency, as a contract for difference, or even we can even say currency for difference. So we are trading BTC as what? A currency, not as a coin. You get it? So now, how do you place a trade? And then another thing that you should also note before before we go. Now, since you are watching the 1 minute time frame, one thing that we should note is that it takes 1 minute for each candle to form. So this candle over here, when for the candle to close, to open and then close, it takes a minute, approximately a minute for this candle to form. And then we are having the 5 minutes time frame, which is the M5. So the M5, it takes what, 5 minutes for a candle to what, to close or open. So this candle that you are seeing over here, it took 5 minutes for it to open and then close. This is another 5 minutes. And then this, it will take 5 minutes for this to close. So around 7 o'clock, this candle is going to close. And then we are having the M15. Similarly, it's the same thing. It takes 15 minutes for that candle to close. And then we are even having the H4 time frame. Which means that it takes what? 4 hours for a candle to open and then close. And then we are having the 1 day. Now the 1 day time frame is also the same. So it means that the new candle will open at what? 12 a.m. and then close at what? 12 a.m. again. That's 11:59 p.m. You get it? So it takes a day for a candle to form. So depending on the time frame that you are going to watch, and then what you would be getting. So the 15 minute, the 5 minutes time frame, let's say the 1 minute, you started from the 1 minute. Now the 1 minute is more detailed. And then the 5 minutes is just an aggregate or a combination of what? Various 5 1 minute candles to get you what? A combination. So it's just like an add up. You get it? With the candles. So this will be adding what? The last 5 minutes candles to form this one candle. And then similarly, for the 15 minutes time frame that we are watching right now, it's just going to be an aggregate of the last 3 5 minutes candles to get a 15 minutes candle. And then if you want to watch the 30 minutes time frame, which is M30 represented over here, where you can see my cursor at right now, it's a combination of 2 15 minutes time frame candles to get this. Hope you understand it. Now to the next thing, how to place a trade. Then we look at it on how it works on the phone. So for you to place a trade, you need this button over here, which is the new order. Now this button over here is just for you to zoom in and then zoom out. And then this thing is for you to scroll to the current tick, which means that you are pushing your chart so that you not see the whole of this right side, this space over here. And then this will allow you to see the space as easy as that. This is your cursor, this is your crosshair. Now let me take the crosshair so that you see how it looks like. Now with the crosshair, it's just giving you like the candle, the market price, and then the date and time, which you can find beneath. So if you look at this right now, you can find, well, 2206, which is June, and then you can find 18th of June, around 4:30, this was the candle that opened. It was a bearish candle. And then you can have tools here like the vertical line. So you see a lot of people drawing lines. You can have the horizontal line. You can also have the trend line. We'll be looking at all this. This is the trend line. We have the Fibonacci tool as well over here. So how do you place a trade? Now for you to place a trade, you move to the side. Now you look at various things. The type of execution, in case you want to take my signal, there are various executions that you can take, the type of execution that you want to take. So now this is called a market execution. If I am to press sell right now or buy right now, what is going to happen is that I'm going to place an instant trade, picking a party, either buyers or sellers, either red or what blue, either what bears or bulls. I'm going to pick a party right now. So that is the instant market execution. And then there are a few things that you should look at. Anytime that you are placing a new order, this is the symbol as well. I'll show you on the phone very soon. I just made some screenshots so I can show you guys. And then we are having the assets name or the symbol name or the quotes, which is the BTC USD, which is written here, Bitcoin versus USD. And then we are having the volume, which is also known as the lot. So it is just the amount that you would like to what purchase. So we are having mini lots, nano lots, and then standard lots. You get it? Micro lots as well. And then we are having our stop loss and then our take profit. I'll explain more into that when we start to trade, and then we take our trends. We understand where the trends are. So anytime that I send out a signal, you should look at what type of execution I'm talking about. If I say buy or sell, then it's an instant. If I say buy limit or sell limit, then it means that you move to this side and then you click here, and then you're going to see pending order, and then you click one of them, and then it's going to give you either a buy limit or a sell limit. And then just press here or here. So if you're having your phone right now and then you want to just test it out, or you're having your PC, you can just open it right now, move to BTC USD, except it's a demo, and then just click buy. Unless, except it's a real account, do not gamble with it. If it's a demo, you can just click sell or buy. And then this is not a demo account that I'm going to be gambling for this lesson, if you get what I'm saying. So now let me move to the phone and then teach you guys with the phone. And then I think I'll explain a few things, then we are done for today. Tomorrow when we come, we'll look at the uptrend or the downtrend, and then we'll move on. Hope you guys can see the image. Okay, good. So this is what it looks like on your phone, right? When you open it, you'll be having a few things. You'll be having quotes, which is the same as where you saw the symbols on my MT5, and then you're having the chat, which is the same as the chat area, it's just at a different place. And then you're having what your trade, where you be placing your trade, and then you're having your history. So if you are to open an account right now, now you move to this side, the new account, or even move to this side, you can click on it and then input your new account details, which will be given to you by your forex broker, the broker that you choose, which my recommended broker again is Gildex. So this is what it looks like on the phone. So let me show you a different thing as well. Okay. So and now this is what it looks like when you place a trade. Now, after you going to the chat area, you see the new order symbol. It looks like this, like a rectangle with a plus in it. And then when you go there, you're going to see your buy or sell. You just click on any of them and then you make a place a trade. But you wait for my signal first. So now this is what it looks like for you to when you come to your trading area. Now you are going to be finding a few things here. You are going to find your balance, your equity, your margin, your free margin, and then your margin level. Now let me explain this thing to you. So what is your balance? Your balance is just the amount of money you deposit on your brokerage account, or is the amount of money in your trading account after you've closed your last running trade. You get it? That is what your balance is. It's the amount of money that you deposited on your brokerage account if you've not placed any trade. or it is the amount of money in your trading account after you close your last running trade. And then your equity is the sum of your account balance plus all floating or unrealized profits or loss associated with your open positions. So all that we are saying is that if you can see this, we are having 23. Let me see. Hope you guys can see now. So we are having 23,000.
Yeah.
And then 895. Now, if you add this amount to this, to your balance, this is what you are going to get is your equity. So if you add your current or your floating trade, the person took a trade of what? A sell on USD card, which is the US dollar against the Canadian dollar. And then the person will made a profit of 400 USD, 454 USD. Now, the 500 USD that you are seeing here, that is the actual money that the person has made. But now we have something that we call minus commissions and then a minus swap. This is what you are going to get. That is the actual trade. This is a trade that I took. It was a long trade. Over here. Sorry, it was a trade that was stayed for more than a day, so it will actually reduce or increase in value depending on the swap, whether it will be a negative swap or a positive swap. So if you add this amount over here to this is what you are going to get. So now what is your margin? So your margin acts like a collateral to you. You get it? So as it serves as something like a collateral for you. Now, these guys, your margin can be thought of as a collateral for placing a trade, and is the amount of your balance which you pay upfront in order to place a trade. So let me share a different chart. Hope you guys can see this. So let's say that we are having a balance of what? 99,831 USD. And then we are having our equity as a what? 99,854. How do we know that the equity is 854? Now, when we add this two right here, you're going to get 23 USD. Now, this 23 USD, if you are to add it to your current balance, you are going to get your equity. That is basically what this is. And then your margin is the amount of money that you would need in your trading account for you to be able to place a particular trade. So for you to place these two trades, that's 1.2 and then one lot size on GBP USD and Euro USD, you will need at least 1,321 USD in your account. That is basically what it's saying. And then what's the name? The free margin is just what? Your account, your margin minus your equity. That is basically what it is. Your margin minus your equity. You get it? So when you see your margin plus your, what's the name? Plus your free margin, it should give you what? Your margin plus your free margin should give you what? Oh, you guys. I'm saying that your equity is the amount of money that you are having. That's your balance plus your running or trades. If it's profit or loss, if it's red, if you see red like this, it means that you are in loss. It's taking you out. Let me see. Confused, Benedict Tete. All that I'm saying is that we will take this again. Okay, in case in case this thing ends, you can join again. Okay, so that I take this thing. This thing is very important to me, so you guys can understand. Now, all that I am saying is that for you to have your equity is your balance, which is this one over here, plus these two things, which is 6 plus 17. So your balance plus 6 plus 17, which is 6 plus 17 is what 23 USD, which is at the top over here. And so 23 USD plus 99,831 USD is going to give you 99,854 USD. And then I'm saying that your margin. Come again.
I understand now.
Okay. And then I'm saying that your margin is the amount of money that your broker will hold as collateral for you to place the trade. So if you want to place a trade of 1.00, this particular broker on this phone will be paying what 1,000 for the 2 trades. That's the margin. It's the sum of all what amounts that you pay to your broker upfront for you to place a trade. So for these 2 trades, you'll be paying what your broker will be holding 1,321 as a collateral for you to place the trades. And then I'm saying that your free margin is your margin minus your equity. So are you getting it? So your margin plus free margin, what will it give you?
Yeah, total balance.
Your margin plus your free margin. In case this thing ends, you guys should join again. I'll do it. Come again.
It will give you your balance.
It will give you your balance. Your margin plus your equity plus your free margin.
I'll give you equity.
That'll be equity.
It will give you equity, right?
Yeah.
Okay, that's good. That's very good. So this is one way you can catch scammers. And then I'll